Money day, guys and girls. I hope you're well. Today, we bring you the market outlook for the week of the 14th of June 2021. If you haven't already, be sure to check out litcapital.co.uk and check out our amazing new website. We do have some pretty cool features that will help you have an understanding on what Forex and trading and investing is about. But if you are, of course, completely new to the markets, then make sure you start your trading career here. We do have a WhatsApp feature, so if you are looking to speak to someone and not a robot, be sure to click the button at the bottom right of the screen and simply give us a WhatsApp. But with that being said, let's head over to the markets and see what's really happening on the economic calendar. Today, what we're looking at is really just the Governor Bailey speaking for the pound. But throughout this week, it should really be an interesting time for us to see the markets actually injecting some liquidity. So on Tuesday, we have again the Governor Bailey speaking. And on Tuesday, really, it's based around the pound as well as the dollar. But it's really a dollar-based action week because on Wednesday, we do have the FOMC combined with the Fed speaking. Well, the Fed is the FOMC, but we also have the Fed interest rate. And the interest rate, of course, as we've seen of recent, is starting to give us some good results, meaning, 16 months ago when interest rates would come out, prices would skyrocket or they would plummet. Over the past 12 months, ever since 16 months ago, prices have been very flat. Interest rates have come out and the markets haven't moved at all. They haven't reacted, but we've recently started seeing a lot of reactions from these interest rates, so we can expect to see something from the dollar as well. With that being said, we've also got the crude oil inventories. This is also going to be a very important alert for us to be able to see the price of oil. And of course, moving on to Thursday, we have the interest rate for the Swiss. We have some CPI, also GDP on Wednesday for the Kiwi. But really, as towards the end of the week, we have, again, monetary policy for the Bank of Japan. So the week is really filled around the dollar. And of course, we could expect to see the foreign currencies take a short or take a dive in light of what the dollar decides to do. So let's have a look at the markets and see how we're looking to see it react based on the news coming up for the week ahead. If you haven't already, be sure to hit the like button, subscribe. You know the vibe, it's lit side. So US 30. Now, when we're looking at the US government bonds, a lot of you traders may not even know what the hell this is. Okay. What we do at Lit Capital is we actually have a look at the bond market, because the higher the treasury bond market goes, the higher the DXY will follow. Okay. Now, we do have this massive monthly imbalance here, which has, of course, been gradually being taken out. Sorry, let's move this higher up here. And what we can see, of course, is prices are slowly starting to push higher. So as we're looking at the bond market, we can see that with us getting higher prices, we can only expect the DXY to start pushing up higher with it as well. On the weekly time frame with the DXY, in fact, let me give you a top down. On the line graph from the DXY, it's important to see that we didn't get this low here broken. So we could potentially just be seeing price push up, giving us a pullback to continue coming lower, because ultimately we are bearish on the dollar. We do think the dollar will die, but of course, when is a different scenario and different time case that we can't, of course, put a finger on. So what we're looking at on the weekly now, of course, understanding the fact that we do have this lower high here, which was broken by the price pushing up, which meant that the structure had changed. We then had price push down and close beneath the high. So beneath the higher low, excuse me. So it put us into a position where really we have to be the slaves to the dollar, meaning we have to really see what the dollar's going to do. For those of you who monitor the DXY, you'll know that it's like the British weather. It could be bullish today, but in 2 hours' time, it can be bearish. So we really need to see what happens with this. But with the bonds pushing higher, we can expect to see a higher DXY. And also, one of the things that's important right now is inflation. That's a massive topic of discussion. And with the Fed speaking this week, it's almost 100% that these guys are going to mention inflation, as of course that is going to be one of the biggest questions they're going to have. So of course they're going to come out and present their information based on what they think they will be doing with inflation this year and next year. That's also going to have a massive part to play on the direction of the dollar as well. So we can actually expect to see some temperamental gains, some temperamental strength. For those who know, when the Fed's speaking, we usually see the dollar gain some strength. So we can probably expect to see the same. Based off of the daily here, what I would like to see is maybe price push down to fill some of this imbalance to work off of this lip block here, in order for price to push higher and play out of this breaker area that I have based off of the 8 hour. So, we're looking for retracements, but we're looking for retracements, of course, for price to continue pushing lower. But, we have to accept the fact that we're not in control of the market and anything can change. Any fundamental aspect that we're unaware of, can really heavily influence the market, and we could see prices push up and, play out of candles that we've got marked up even higher. So, we're going to sit on the sidelines and monitor what happens here. But for the time being, based on what I'm telling you guys today, we are expecting to see some dollar strength. The dollar, of course, is speaking throughout the week. So we can expect to see prices relatively strong. I mean, last week we saw the dollar relatively weak. So, it's probably the week for the dollar. And let's see how we get on with that. Moving on to Euro NZD, aka my baby. We actually saw Euro NZD push up into this daily candle here, 50%, gave us a nice retracement. And of course, there's another candle just above, which we've seen other candles react from. Now, with Euro NZD, for those of you who know, especially those inside the community, you'll know that this is a pair that you have to get right, okay? You can take many entries based on different confluences, but ultimately, this is a pair that is purely about trying and trying again. Sometimes you may have multiple confluences that gives you the entry, but you only get 60 pips, and then price pushes up, plays out of another area, and gives you 335 pips. It's really about being pernickety with this pair and making sure that you've got different areas, all areas covered, so that you can have a sound analysis on, if I'm stopped out of this trade, where else can it react from? We have been looking for prices to come down with the euro, but of course, based on what the ECB said last week, they're actually looking to decline their their inflation next year. So there is actually bullish momentum for the euro. Okay, let's not get it misconstrued here. The euro does have a big opportunity of replacing the dollar, and as a favorite pair. And with that being said, we really do want to look at the higher timeframes here. And we've mentioned this many times before, but just to show you guys again, we have had structure broken here, which means it has been bullish. Okay, this lower high was taken out, and really and truly, what we could see is a slight pullback into a weekly level here of structure, and then prices could actually push on higher and skyrocket. It's a possibility. Of course, it's not something that we're preying on. We are, of course, waiting to react as opposed to foresee. As opposed to trying to foresee something happening within the market. But nonetheless, we are really, really, really excited. We're really excited about Euro NZD because we understand that if price is to push up, then we're really going to catch a good entry on this. And for those of you inside the community, you'll know when Euro NZD comes about and we're on the right side of this, this is what we call a money day. So yeah, back onto the candles here. We would like to see ideally price push down to take out the liquidity below. We've got some mitigation areas beneath, and we also have this beautiful 8-hour block. And if we refine it down into smaller time frames, it plays into an institutional candle. Now, this bearish candle here was based on the NZD interest rate last week, or a couple of weeks ago, 25th of May. So, based on the euro interest rate, we didn't really see much. If anything, we saw a bit of a push. So we're really looking to see if prices can come back lower again, just one more time, to give us the perfect entry to push this long. But of course, let's see what happens, and we will keep you guys up to date inside the Discord. But if you haven't already, click the bell, smash the bell for notifications so that you guys can keep up to date with every video that we post moving forward. With that being said as well, our Discord, you guys need access to the Discord. You're only going to get access to the Discord if you head over to our website. And if you check out the packages page, you will be able to see on this page that we do have a few different products available for everyone. But most importantly, the community access. All you'll need to do is fill out the inquiry form, and one of our team members will get in touch with you right away to give you the information you need to get access to our community. So with that being said, if we're now looking into the Euro USD, of course, we saw a quite well, not even quite. We saw a 3-day bearish action with the euro. The euro was really responding to the DXY, which GU actually wasn't, which is the reason why I'm going for EU as opposed to GU with this update for you guys. What we're looking at here, again, if I show you guys from a higher time frame to a lower, we've actually had some weekly, we've got a weekly structure level here. And if I go onto the line graph, you can see that the price, the blue lines are the weekly structure levels, and we actually have price wick in these areas. So we've had reason to understand why prices would turn around and push down. They've pushed down, okay? They haven't closed beneath these lows. Of course, they have closed beneath some areas inside of here, but this low here is the significant higher low, which we haven't had price close beneath. But also on the other side, we haven't had price close above the high. So we are in an area where we do need to see what happens. Of course, we're looking at this high. Price has not closed above here. Price did of course close above the lower high. So it's a really interesting period for the euro because, like I said to you, with the ECB speaking and announcing that they're going to be decreasing their inflation next year, which could just be very well bullshit. That could all be bullshit, okay? But because they're saying these things, of course, the markets are going to respond accordingly. So what we really would like to see here is just a slight push or a slight push down into this daily candle. Okay, that I've got marked here. We've got a daily lit block here that we'd like to see price push down into. Now, I've got two scenarios that could potentially happen. The blue one is that price is pushed down, which has already. It reacts out of this candle, pushes up, fills the imbalance, comes down, plays out 50%, and then whoosh, pushes up, goes to make a new high, or at least towards the weekly structure level. That's scenario one. Scenario two could just be that price pushes down straight to the 50%, retests by completing and filling the imbalance, works out of the, plays out of the institutional level, comes down to a weekly structure level, and then whoosh, pushes all the way back up, grabbing the liquidity, and of course, moving towards making a new high. The reason why my two scenarios are bullish scenarios is because, of course, what the ECB has said last week. So I would like to see a continuation of the strength in the euro, but I am understanding that this week, of course, may be filled with just dollar action. But, based on the price action that we're seeing here, we've had price push up, push down for a higher low. Now we're expecting to see price make a higher high. Of course, if it doesn't, then we can't call this the higher low. But nonetheless, guys, we are seeing price at the moment in a reaccumulation phase because price has pushed back down, collecting some orders, filling the imbalance. So we could just see price push on up to make a new high. Let's see what happens. And of course, be sure to stay in touch with us in the Discord because we will be keeping you guys up to date accordingly. And if these areas don't play out, of course, there is other areas that we have marked, which already is available for you guys inside the Discord. And let's go on to gold. Last but not least, okay, no, one more before gold. One last one after gold, excuse me. But gold, shout out all my gold diggers. Okay, you know the vibes. It's lit side. We've been very, very, very healthy with gold. Shout out Josh because we eating well, eating well. We're eating very well with gold. But what we're looking to see now is actually a reaction around this institutional level. Okay, and if we don't get the reaction around there, this daily candle here, based at 1843.6, we would like to see we'd like to see a reaction from the high to the low of the candle. 50% would probably take us inside this institutional level as well. So again, based on the stronger dollar, what we're seeing and what we've seen so far is gold pushing down because investors are losing confidence based on the fact that the dollar this week is speaking. And of course, they will be mentioning the long-term important word called inflation. So what's really probably going to happen here is due to the Fed focusing on the immediate problem, which is likely inflation, or the longer term problem, which is going to be tapering, we're probably going to see gold prices push down a bit lower. So we actually had a 50% reaction out of a session candle up here. We would like to see prices come down lower. Of course, that would fill our bellies and give us chances to load up on some gold. So, let's kind of go with the flow right now and go with what we can see. What we can see is prices pushed up. It has made a new high. So we are expecting prices to just put what's closed above the lower high. So we're now expecting prices, of course, to very simply pull back. And that pullback could take us around 1785. you know, based on what we're looking at here on a weekly. So let's not be too naive to think that gold is just going to give us a shallow retracement. It could push down lower. Of course, once gold closes beneath here, we're going to be bearish ×2. And of course, once gold can close beneath here, we're bearish ×3. Free the boy merely. So yeah, guys, that's my outlook on gold. Okay, I'd like to see a reaction out of gold based on this candle. Of course, once the market presents us with the Fed speaking on Wednesday, we can expect to see some volatility and, of course, some massive price injections, some massive price action, excuse me, with gold. So let's see what happens, and of course, be sure to market areas of liquidities. Oil, we're going to finish on oil. And I'll be very brief with this one. So with oil, of course, you guys would know that we've been providing you guys with loads of juicy setups inside the Discord. This buy, for example, was provided. And of course, if you held this buy, you'd be sitting 300 pips in profit. But going back over to the monthly, what we are looking to see here is price actually react out of this monthly up candle right here. We've got a monthly candle, but if we go down to the weekly, we can also see that price is actually yet to touch this lit block. So we're waiting to see if price can push a tiny bit higher, and of course favor a short out of the 72.98 handle. Let's just call it the 73. Okay, we're looking to short oil out of the $73 handle, but we are understanding that the prices of oil has been heavily manipulated of recent. So of course we do want to see what the price action is going to show us. We're not just going to take the trade because we have the setup. We're going to take the trade based on the setup and price action. So be sure to stay inside of the Discord. Also, guys, every Tuesday to Friday, we provide you guys with a 2-hour live stream session from 6:30 in the morning to 8:30 a.m. as well, GMT time. So be sure, if you haven't already, to get access to the Discord. The Discord is where you're going to get more information. And of course, if you're a new trader or just someone who wants to stay inside of a community with people who don't use indicators, people who aren't relying on external factors and really looking at price action, be sure to give us a shout. And of course, head over to litcapital.co.uk so you can, of course, get access to our community, or of course, purchase one of our mentoring programs. But most importantly, guys, check out our reviews on Google or on Trustpilot and make your informed decision based on what you see, not what you hear. I'm Big Vell. I've been your host for today, and I appreciate you guys' time. Don't forget to like and subscribe. You know the vibe. It's lit side.